He was making a lot of talking points about IUL, but attacking whole life.
It just shows Jim is presuming that he is the expert in life insurance when actually he's not. These are just vague talking points. He'll say, well, whole life is expensive and complicated. And he never justifies it. It's like, okay, expensive, quantify that. Show me some numbers. And then as compared to what?
Put me on the hot seat and let me defend whole life insurance. And I'm willing to do that.
The opportunity cost of putting your money in whole life versus putting it in these other investments. That argument only makes sense if the returns in your investments are guaranteed. You'll earn 12% in the market. You'll earn 20% in private equity, whatever it is. That's not a given. How do you know that? Prove that to me. Prove to me. What you're saying is give up the guaranteed return and take a hypothetical return by gambling in these other assets.
On today's episode, I am here with Logan Hertz, another fellow YouTube creator, and also someone who is a nerd when it comes to life insurance. Logan, you reached out to me recently, and you kind of made a joke. You're like, hey, your face is pretty much making up my entire YouTube video series because you were doing a series reacting to my debate with Jim Do. And just for those of you that have not seen this debate, we'll have the links down below. But there's a part 1 and a part 2 life insurance debate that I did with Jim Do, who is, we'll just say, depending on, I'm really curious to hear your thoughts because you have some you have some things to talk to me about, and I want to hear your take on everything. But Jim is maybe not very pro whole life, not very pro infinite banking, not anti life insurance, but has a lot of those talking points. And his pitch really is fee only. People pay them anywhere from $1,000 to $9,000 a month, and they kind of do holistic planning. And so there's like a look down upon when it comes to insurance and commissionable products. And in many of Jim's talks, he's gone after the insurance industry and insurance agents really hard. I think he toned it down a little bit because I was on there, and then we had Ben and Bob Frazier, who were kind of like the people that were like moderating the debate, and they were not anti-life insurance. In fact, Bob bought life insurance from Jim, which was disclosed on that. So it's kind of funny, full circle. It's like, hey, I made the least amount of money in commissions out of this whole conversation between us all. All that to say, I just want to set the stage. There's a lot of things that I wish I would have done different. But I will hold on to those as we have the discussion. I know you have some things that you emailed me about, and obviously I think you made 6 videos. And so if you're not subscribed to Logan's channel, we'll make sure his channel's somewhere, maybe even collaborating on this, so you can go check it out. Without further ado, I'll hand it over to you, and I want to hear your initial thoughts. This is the first time we're talking about this publicly around your thoughts around the debate.
I think the biggest challenge I have is we didn't define the terms properly. So what is whole life insurance? What is the infinite banking concept? We never got a clear definition of that. So how can you criticize something that you haven't clearly defined, right? A lot of the conversation missed the point. It's talking about bad practices in the industry. Every industry has bad practices, bad agents. Yeah, every industry has bad players in it. So, I mean, Caleb, how can you possibly criticize or defend something if you haven't really defined what you're talking about?
Yep. How would you define there? Because obviously it's you have limited talking time. I'm not sure when the questions are coming. How would you define what whole life insurance is and infinite banking if you were in my shoes?
So whole life insurance, I would just define as a permanent death benefit, period. It's a contract with a permanent death benefit, right? And then, of course, there's a lot of benefits that flow from that, but that's what it is in its essence. Infinite banking, I would say, is more about using a specially designed whole life insurance policy or system of policies as your primary cash flow management tool, your primary financing vehicle, right? It's a safe store of capital, and then you use it to finance other things. Now, those definitions I understand are not totally precise, but that's at least a starting point, right? Because I'll get into more of my points later, but that's my first point. Because when I hear debates about whole life insurance and infinite banking, my frustration is we always get lost in mechanics of whole life insurance or bad practices in the industry, which misses the point. Because when you bear it down to the essence of whole life insurance, it's hard for anyone to argue against that does have a use case, that does have a value. And same thing with the infinite banking concept, right?
If I would have said something like taking a step back, whole life insurance is a contract between you and an insurance company that provides a permanent death benefit. You think if I would have stated that would actually move the needle? Because it's like between you and me, yeah, that's correct. But I don't know.
It would
I
move
don't.
the needle because then when Jim goes off on his various points, you could say, Jim, you're missing the point. You haven't. Let's go back to what I said. You'd have to hold him accountable. Keep pulling it back. Jim, you're talking about
Yeah,
bad agents. Yes, they're bad agents. Okay,
yeah,
period. Let's go back to whole life insurance. You're not criticizing
right,
whole life insurance. Why would I not want a permanent death benefit? Explain that to me.
right,
Why is it a scam? Why is the agent not
exactly,
deserve to receive a commission because he gave you a valuable product, right? So
right,
then you could
right.
just keep pulling him back,
You're
right?
totally right. There's a difference between attacking a product and a practice, and we
Right.
went and this is one of the things that I wish I would have done differently is if you look at the failure rate in businesses, it's high. Does that mean you shouldn't start a business? You look at credit cards as an example. This is where I respect Dave Ramsey. He's really principled. He's like, these companies are evil. Don't do business with them. But credit card companies, like I use credit cards. There's everyone on that call uses credit cards. Like I know that personally. And yet, if we want to use anecdotes on people getting screwed and horrible horror stories, you could come up with thousands of examples there. And then we're not even talking about other professions that are in the space. So
Right.
I'm totally with you. And so I felt like I was swinging at pitches because I was trying to acknowledge to say, hey, I don't co-sign that. But
Right.
what I should have done is clearly like gone back to, okay, let's
You
talk
should have just
about
taken the pitch. It's a
practices
wild
just
pitch.
because
Just take it. Just say,
yeah,
okay, that's a ball.
yeah, but it's just like it's a but defining that because if you don't address it, then it's even worse because then you're not addressing it.
Right.
But
No,
it's just
sure,
talking
sure.
about and I think I stated it once, but it should have been a common theme because we kept on going back to it and that was probably the biggest takeaway for myself as I'm like okay next part two if there is a part two there's got to be a there's got to be that. And just so you know, I did send illustrations and I sent like a pretty lengthy email because I wanted to say, hey, and even in the video, I'm summarizing what I said. I said I know all the talking points, but in order for us to get to 2.0, I want to share with you what I would deem a properly structured whole life insurance policy so that we can start addressing not just life insurance in general, but like attack this product. Attack this product, Jim. And to Jim's credit, he responded, but he just said, "Hey, I would need a few weeks to take a look at this." We almost like in court we like threw it out like, "Hey, don't use this," because all
Yeah.
those these like illustrations can be super
It,
misleading. And
it
again,
will
that's
be
a
a
talking point for
distraction.
IUL. It's like, okay,
Yeah.
so
Yeah.
all that to say, like I did going in, and then that was kind of shut down, and so I think I over course corrected, and that's something I regret.
My biggest takeaway from the thing, what it kept coming back to for me over and over and over again is if you're working with a good agent, none of these problems that Jim is bringing up will happen. He talked about a lot of different problems that are a result of not working with the right agent, not having a properly structured policy. If you're working with Caleb Williams, you're not going to run into any of these issues, right? And then I also think maybe you should have called him out a little bit more when he says, "Hey, you can take out a securities backed line of credit. Hey, you can borrow against real estate," because that's a common one. And it's like, okay, yes, there is an analogy there, but that's a pretty dishonest comparison. You've got to go to a bank and qualify. My response to Jim would be like, "Have you ever tried to do that? Are you really suggesting that your average person should be
Yeah,
using a securities backed line of credit?" That would be very risky, right?
yeah,
I know someone who does it professionally, and he's like, "Look, this is for professionals only, okay? I don't go more than 25% loan to value. Even that, I would be very cautious about, right?" And he knows exactly what he's doing. Same thing with real estate investors, right? So that to me is, yes, there's an analogy there, but let's not pretend like it's the same thing. It's not the same thing.
yeah, yeah. No, and also there's the asset classes are totally different. One's an investment, one's not. One's
Right,
has volatility, one doesn't.
right.
One has these. So I'm totally with you, and Yeah, I was thinking it, and I think I did address it, but just maybe
You
not
did
strong
some,
enough.
yeah. No, I'll give you credit.
Um,
You did address it, but I would maybe just made it more clear.
what was
Yeah,
interesting to me is he was making a lot of talking points about IUL, but attacking whole life, and I was just
yeah. That that was
that was
interesting.
what was so funny to me. I was just like, I don't know, I there's clearly a disconnect, or I don't know. I want to give him the benefit of the doubt, but I'm like, you're making a lot of whole life points, Jim, and that's why I'm like, if there would be a part two, and I could show him a policy, I would love for him, like, it would be so valuable for him to pick apart a whole life policy that we put in front of him, and he reads the contract and all, because yeah, I think he might have some unique points, but I think a lot of the points that he mentioned goes out the window. Or I could address and be like, actually, that's not how it works. And I think that would be like much watch TV would love that. And I'm going to use this as public accountability to reach out to Ben and Bob and see if we can set that up, because that really is what needs to happen if we want to do a part two. Having part two with the same type of big picture talking points don't need to happen. Let's actually put me on the hot seat and let me defend whole life insurance, and I'm willing to do that with numbers.
If you do that, just make sure you 100% contextualize it, because you can't look at any policy in isolation. You got to say, okay, here's the financial situation of this married couple with 2 children, whatever it is. Here's what they're trying to accomplish with this policy, because
Of course.
otherwise it becomes easier to argue back and forth, right, based on the numbers on the page if there's not context. Because I would always say whole life, it's a tool. It's like any other tool. There is no properly structured whole life policy in the abstract.
Right.
I try to avoid making fun of all base whole life policies because they have a place. There absolutely
Right.
is a use case for all base whole life policies. Those are not bad policies. They might be bad in certain situations, but those are not bad policies. I know a lot of my colleagues in the industry who use more of the LEAP model, and they sell all base contracts, and they're phenomenal. They're phenomenal. But
Yeah.
the other thing that I found interesting, and now I'm going to take us into a bit of a distraction, but it seems to me that what Jim is doing is really doing his clients a disservice in two ways. Number one, when he talks about negotiating an agent's commission down, right? Like disclosing and negotiating that commission down. First of all, that's illegal and unethical. It's called rebating, but it's also the scarcity mentality, right? Like, would you go to your employees and say, hey, I'm going to negotiate your compensation down as much as possible so I can save money, right? Well, obviously, you might save some money, but it's going to kill your business in the long run. So I think it's a self-fulfilling prophecy for Jim's clients. When you approach agents that way, no good agent is going to work with you. And then the second thing is the whole thing about, oh, we, get all the blood work and we send it out to 15 different insurance carriers. That's a really bad idea. That's a horrible idea. And I talked in my episodes about why it's a bad idea. But it just shows Jim is presuming that he is the expert in life insurance when actually he's not. And so he's just working with order takers who are willing to accept a lower commission. He's not working with agents who are actually going to be strategic advisors. And that's why I think he has these challenges.
Yeah, if I give him the benefit of the doubt, when he says, I think that's just something he says on everything. Like everything should be negotiable or disclosed, and so yeah, of course you can't.
That's not what he said. No, he said we require those to be disclosed and negotiated. That's what he said. We require these to be disclosed and negotiated. Which, even if that's legal, which it's not, that is the scarcity mentality, right?
Right.
That's the scarcity mentality.
It could be a way of just saying like another concept of overfunding. Like it's not like we negotiate our comp, but by structuring a policy with less target, you by default make less. And so that's maybe like, again, I know he said what he said. I'm just and then disclosing, I don't have a problem with. That's just part of their deal. My issue is just because something gets a commission doesn't make it right or wrong. Like you could have a commission could be 3 times the size. It's like what about, how does it affect me today and in the future? I know we had a different conversation about our view of the future, but I do genuinely care, like, how does this affect me today? And then how does this affect me over 30 years? And those are really 2 good data points for me to like start measuring. And it's like, if you're getting paid a commission, it might be a lot less than another alternative. And at the end of the day, I care about myself in this scenario. I don't necessarily care you, the person getting paid. So that's my take there. I want to hear your why sending out to 15 different insurance companies is a bad idea, because I actually think it's a good idea if they're the right type of person. And we've done something similar to that, where you don't get any declines, but you kind of get a sense of who's willing to insure you before you do an application, because if someone gets a decline, it could really affect the future of getting that person a policy.
Well, so let me back up. I want to finish the commission thing. I agree with you. To me, it's just what kind of a person, when you walk into Walmart and you buy something, are you going to stop the cashier and ask them, hey, what's your salary? I want to know how much money you're making. And if I think it's too much, I'm going to complain and negotiate it down. No, you just, here's the product. Here's the price. If it's valuable to me and I'm happy with the price, I'm going to buy it. And by the way, I want you to be compensated, right? Like, I want my strategic partners to be compensated as much as possible, because I understand that money isn't being stolen from my back pocket. It's actually a strategic investment, right? So I try to reward my partners as much as I possibly can. Right now, I got a referral from a guy who does health insurance, and I'm going out of my way to make sure he gets rewarded for sending me that referral, which was a long-term care case. So again, whether legal, ethical, or unethical, it's the scarcity mentality. And so I think with Jim, it's a bit of a self-fulfilling prophecy when you treat agents that way. So to your point, though, are you actually doing blood work, or are you just doing sort of informal applications?
You could do a version of both.
Because that's the challenge. So the blood work is the problem, right?
Okay.
So
talk to me about what the blood work.
A couple of things. First of all, you're introducing additional risk, right? It's possible something could be discovered in that blood work that's negative, right? So you're introducing an additional risk. Okay.
Okay.
There are good carriers out there, as I'm sure you know, that will do fluidless underwriting, right? So if we think we can get fluidless underwriting, why would we do blood work? It's adding unnecessary risk and unnecessary work, right?
Yeah, I do agree with that premise. There have been times in the past where, because of speed, we'll get underwriting done faster and then get reimbursed. That's a whole different can of worms that we won't get into. But normally in informals, you're just sending out their name blanked out with the
exactly. Yeah, that's fine. And that's totally fine. Informal applications are fine. But the agent is doing the work. Not
but you're saying
the customer still.
Insurance companies, why add another data point in an informal? And I tend to agree with that from a standpoint of, you could actually be setting yourself up for worse situation. If you're a high-earning professional, entrepreneur, or someone who wants more control of your money, we offer something called a clarity call. It's a one-on-one conversation where we learn more about your situation and walk you through how integrating whole life insurance could help better your financial situation. It's no pressure or fluff, just real clarity on whether this strategy is right for you. Click the link in the description or tag comment below, and we'll walk you through exactly how we can help you.
Right. You disclose what the insurance company requires you to disclose and no more. And also, when he says 15 different carriers, I mean, to me, it just tells me he's not talking to his clients. Like, I'm going to have that conversation with my clients. And after that, I've probably already narrowed it down to, like, at most 5 carriers, at most, right? If you're sending
I should have said, but I wasn't going to. I'm like,
it's a flex. What he's doing is he's flexing. He's like, more is better.
The 15 carriers that it's here's the thing is, with some of this stuff, like, you're taking people at their word, but you and I both know that a lot of people exaggerate their income. They exaggerate almost everything. And so maybe there was, and again, I'm not saying this about you, Jim. I'm saying this about statements that are made by other people. If someone's like, usually they're taking one case of what they did maybe one time. And if you're working with IMOs, that's a lot of times what they will say they'll do. Like, oh, we're shopping it out. And it might just be like an email to, and it's all valid stuff. And maybe that's what they do with everyone. But I just, like, those are the kind of things that I'm like, I'm not going to try to challenge that, because in my head, I'm like, okay, it made me feel like you're just creating things to make, if someone doesn't do that, look bad.
Exactly. Exactly. Just like people will say,
any way to validate it. Do you actually do that? And you're right. I wasn't even thinking about the blood thing. that's the benefit of like Monday morning quarterback. You can go back. I
Right,
just heard
right.
informals, and I do think the concept of informal is smart,
Yeah.
wise, and
hmm
and
Yeah.
and especially if you're working with a big case. Um, I have no problem with people doing informals before they start traditional underwriting.
Yeah, yeah, I agree with you. I think it's just a flex on Jim's part. He says 15. Wow, I work with 15 insurance carriers. You only work with two, therefore I'm better. It's like, no, actually, that's the opposite of the case. The analogy I used is you go to a realtor and the realtor sends you every house on the market. Well, that would not be helpful. You would want to have like a small number of houses that are actually relevant to your situation. Likewise, it's like, hey, look, we're not doing any of that until I understand your situation. And once I understand that and what you're trying to accomplish, we're probably talking to maybe two insurance carriers, right?
Right.
It's not going to be 15, right? So, yeah, and I think when he did the same of the opportunity cost of putting your money in whole life versus putting it in these other investments, there's a couple of things wrong with that. I know you would say, well, that's a false dichotomy. This is not intended to compete with investments. But even beyond that, I would say, Jim, there's that argument only makes sense if the returns in your investments are guaranteed. He's acting like it's a given. You'll earn 12% in the market. You'll earn 20% in private equity, whatever it is. That's not a given. Those investments blow up all the time. People lose money all the time. So even if I accept his premise, I agree
Yeah.
with Peter Nelson. We're granting them too much. Like people will say, well, you'll earn more in the market. And we just say, yeah, that's true. I'll say, no. How do you know that? Prove
Right.
that to me.
Yeah.
Prove to me. What
Put
you're
them on
saying is
a
give up the guaranteed return
yeah.
and take a hypothetical return by gambling in these other assets.
Yeah, and you're totally on to something. I've taken the approach that I'm not going to try to. I believe that life insurance not being an investment does not disqualify it from being a part of the equation. So that's
Right.
the route I'm going. And so
Yeah, no, I'm
sometimes
with
I
you.
strategically acknowledge the hey, I'm not like it just picking the battles because that usually de
Derails
make
it. Yeah,
someone
no,
like
I'm
they're
with you.
not ready for that talking point. They're like, wait, what you agree that it's not going to outperform investments? And it
Right.
almost
Right.
versus if you do, you're giving them a lot of material to potentially dunk on you. So that was actually strategic for me to not push back on, but you're in a different world and maybe a different conversation that could be more appropriate. I knew all three of those people. They have very high expectations when it comes to what they invest in, and I knew that it would not resonate and potentially make me look bad if I tried to really argue that point. So it was me choosing to pick my battles, and I didn't want to pick the investment battle in that conversation.
Yeah, no, I'll grant that they're not just their clients are not buying mutual funds. Like they're doing more sophisticated types of investing that probably make more sense for your average person. Again, that's another thing too, is like who are we talking about? Because for your average person, there's probably a different strategy that makes sense than for a high net worth, high income earner, that kind of a thing. But the other thing he kept saying, and these are just vague talking points, he'll say, well, whole life is expensive and complicated. And he never justifies it. It's like,
Yeah,
okay, expensive, quantify that. Show me some numbers. And then as compared to what? What are you comparing it to? Right.
yeah,
And that's what makes it so interesting to me is that he says whole life is expensive and complicated. And then he says, but you should put your money into these other assets that are way more expensive and way more complicated. Real estate, private equity. He's probably doing private placements, right? All kinds of stuff that is way more expensive and complicated than whole life, right?
yeah. And he's like almost makes this standpoint of like nobody understands how this product works because of one of his buddies who's really smart that doesn't understand it. And I it's challenging because it's like, okay, that's a statement that's being made. I'm curious from if you were heard that statement, how would your response be? Would you go back to fundamentals and say, hey, like actually explain to me what that because it's actually not as complicated as you think. Um, like how would
Right.
you address that if that was
Yeah.
something that was
Yeah.
stated?
I would say, look, when I go to buy a car, I don't need to be a master mechanic, right? With any asset out there, there are certain complexities that you'd have to be a life insurance actuary to understand, right? But you know what you need to know, right? I would say a similar thing here. I can, in 15 minutes, probably give me an hour maybe, right? Walk you
Yep,
through everything that you would need to know
exactly.
about a whole life insurance policy. And because there are guarantees, I think that the consequences are much less dire than if you're looking at an investment where you're taking on risk, right? So with whole life insurance, it's kind of hard to break it. Yeah, it's not going to give you amazing performance probably, but you're not going to lose money if,
Right.
so I would say that. I'd say, yeah, maybe your buddy doesn't understand everything about it, but he's not a life insurance actuary.
Right.
Do you think you need
Oh,
to be a home builder
yeah.
to before you can buy a home?
Another analogy is, do you need to know how a watch is made to tell time?
Right.
And
Exactly.
there's most people, if knowing how everything worked was a qualification, say the S&P would be a lot
Yeah.
lot smaller. The number would be a lot smaller if that disqualified you, because most people get into cars, like you said, and don't know how the engine works, but they still drive, and it gets them to point A to point B. And what do they actually care about? How the engine is
Right.
made, or getting themselves to that destination? I think from a planning standpoint, we got to be focused on results and outcomes. And
Right.
you want to order your time, your money, your relationships in order to get that. Anything else from a standpoint that you want to mention? And then how do you actually think objectively how the conversation went? Like, do you think this made the life insurance look worse, neutral? What do you actually think objectively? I know that you're in it. You might be, other than me, one of the biggest critics, but overall, I felt when you read the comment section and what I've heard privately, a lot of people were like, Caleb, I really appreciate what you did. I appreciate, going out. So I was encouraged by the responses, but then again, like, people are going to obviously respond maybe nicer because they're responding to me. They may be saying the same thing with Jim. When you look at publicly, though, there was a lot more public support for our side. And part of that is I have a bigger YouTube channel, so I don't want to let that go to my head, because I think if you had 1,000 people watch that, that you'll have a different sample size than what we did. I know I'm asking you a couple like final thoughts, and then how would you measure the debate?
Well, I'll take the second question first and just say I thought you did a terrific job. I think it's very difficult when you're extemporaneous, because I think, I'm sitting back evaluating things after the fact. That's easy to do. It's much harder when you're on the spot, you're under pressure trying to come up with a response. And I think you do a good job of just being very diplomatic. I think, and you heard Jim concede that overfunded whole life can work. That was a big concession that you got out of Jim. And I think because you're diplomatic, or you're able to get that out of him. To your point, it was kind of strange how he seemed to like IULs more than whole life, which is kind of interesting. That's normally the opposite of what you see. So I definitely think, just having the conversation, there's tremendous value already. Getting these ideas talked about in more avenues and on more platforms, I think is a good thing. So I 100% think it was the right thing to do. I think you should do more of that if you can. I think you're one of the best proponents in the space. Um, in terms of closing thoughts, I think really a lot of the conversation boils down to there are some bad practices in the life insurance industry, which no one is going to deny that. Some combination of that plus comparing whole life insurance to an investment, which is not understanding what it's intended to do. So I think we need to try to do a better job of maybe changing the paradigm.
Right.
Instead of thinking in terms of return on investment, let's, like Caleb Gilliams would say, let's think in terms of cash flow, right? If you boil everything down to return on investment, then the whole life insurance doesn't look very good, right? And only these other assets look good, right? But let's think through the premises behind why we believe return on investment is this amazing metric, right? It's certainly not the only one, right? And so maybe we need to, instead of talking about whole life per se, talk about what paradigm are we using to evaluate these options, because invariably that's where the challenge is, right? That's where the challenge is.
Yeah. Yeah.
And then
Yeah.
actually the third point I have to bring up is because you brought it up too, and I 100% agree with you. I think it's just really sad that a lot of people hate agents because they make a commission. That's really what it boils down to, which I just find such an envious attitude. That's so sad. Why are you upset that somebody else got compensated? I've never understood this attitude. If I were greedy and selfish, I would not want to get paid on commission. It's hard to make a commission. It's really hard. And someone else is in control of whether you get paid or not, right? The customer has to say yes, and you're not in control of that, right? So that's just the scarcity mentality that whenever I see it,
Yeah.
I call it out.
I'm very empathetic to that though, because I think a lot of bad examples that you pull from,
Yeah,
the
sure,
their
sure.
potential incentives played a role. And there is a short-term incentive in this space that it just the industry itself, insurance companies themselves should think about it. And
Oh, they
it's
are.
hard, so it's
They
like
are.
there's a bigger discussion, but again, it doesn't make it goes back to, is this product actually the right thing for you or not? It
Right.
should not matter. But I also think that it's an easy thing that's along with the bad practices. It's like those two talking points. And again, there's almost every industry, including your faith, that you could come up with example after example
Oh, sure.
of
Yeah.
and you can cherry pick things about this
Yep.
person, bad practice, this thing.
Yep.
And especially with the internet, all those things can get amplified. And
Uh-huh.
it's those things need to be acknowledged, but that doesn't mean, like, we need to go back to, if life insurance is a good fit for you, you should do it. And if it's not, it doesn't matter if I come up with 1,000 reasons why you should do it. If it's actually not going to better your life, don't do it. And I actually think that message is very disarming, because then it's like, okay, now let's talk about the actual product and if this betters my life. And that's what I would want to do in part two, is like, okay, we get the talking points. We get that there's some bad actors. We get that people get screwed. We get that. Now let's talk about, like, if they work with me and they get this product in this scenario, like you're saying, this is the outcome. This is why we decided to have insurance this way in this situation. Jim, pick this thing apart. Let's debate this conversation based on what the inputs I gave you about what they want and why we chose this. And technically I'm at a disadvantage, because now it's like the person that speaks first. I'm the one that's saying, like, this is what I'm thinking. And now
Uh-huh.
now you have ultimate content to push and pull. But I'm more than happy to do that, for the record, because I think that would shed so much light in a good way on how we structure things. And I think Jim would end up referring clients to us. I really do believe that. If Jim, like, saw what we did in our practice, I think he would be like, hey, I want to send people to you. So that's selfishly, I think I could get some business out of this part too, if it was set up right.
Yeah, I think I like the word you use, disarming. I think you are very good at being disarming. I'm trying to get better at that. I think I don't think I'm a combative person by nature, but I think when you're in business, and especially social media just brings out the worst in people. I'm trying to do a better job of that. But yeah, I think you're very diplomatic and very disarming. I think that's extremely valuable. And I think it's extremely needed in our space, because we see, on both sides, people probably, including myself, are more combative than we should be. Because you're right. Once you disarm that, okay, now we can have a real conversation, right? I'm not saying this is right for you. I've gotten much more nuanced about, I'm not saying you should buy whole life insurance. I sell more convertible term than anything else, right? And that's just like, just take that off the table. Okay, we don't have to talk about whole life, right?
Yeah.
Let's just talk about human life value and protecting your family.
Yeah.
That's it.
I love it. Logan, thank you. Thank you as always for
Thank you.
coming on, and thank you for the coaching session. I feel like I got a free coaching session that's going to
No.
make me better. And
Well, I
and
was the
and
student then.
but I think just by documenting how I can get better is going to make us all better. So if you enjoy this content, please subscribe. Majority of people that watch our content actually don't subscribe, and the ones that do aren't hitting the notification bell. Those are two really simple ways that you can help us have more conversations like this. And if you're not subscribed to Logan, go check out his channel. He's doing lots of content, and it's tough. You're past your first 1,000 subscribers. That's the toughest journey. Like, I think getting to 1,000 subscribers on YouTube is probably the toughest thing ever when it comes to social media. And you've done that, and so I think the road, the next 10,000 subscribers is actually going to be a lot easier than the first 1,000. So go support Logan and his channel. And Logan, I'm sure you'll be back on here in the future.
Thank you so much, Caleb. Honor and a privilege as always. Look forward to the next one.
If you're an advisor, life insurance agent, or someone who just loves the life insurance space, we have a must-attend event for you. It's our 5th annual Life Insurance Summit, June 15th through the 17th, right here in Nashville, Tennessee. Not only are we going to have the biggest names in the life insurance space, but this is also an incredible opportunity for you to meet and connect with like-minded individuals and be a part of our ever-growing community. Learn more and get your tickets before they sell out in the link in the description or pinned comment. Can't wait to see you there.